JJ the CPA here. Hope you're doing well. Hey, thanks for tuning in. Let's talk about the EIDL, and let's really break it down. But the EIDL is the Economic Injury Disaster Loan. And depending on where you are in the need for this, it's easy to get maybe some of the terms or some of even the terminology kind of mixed up on this. So really this falls into four categories, okay? There is an EIDL Advance, okay? That's the first thing, and that is up to $10,000. Before April 3rd, it was $10,000 per entity, and then after that date, it was $1,000 per employee, no more than $10,000. It doesn't have to be forgiven because you just don't have to pay it back. You get that regardless if you get approved or take the next three versions of the EIDL. So think of this as an umbrella, and that was the first item. It's all called Economic Injury Disaster Loan. So you can also get what's called an Express EIDL, and the Express is up to $25,000. There's no personal guarantee on that, and they don't take any collateral assignment. So they don't have any clause into any of your assets, and that's up to $25,000. That's still called the Economic Injury Disaster Loan, the EIDL. That particular one would be called the SBA Express EIDL. Then above the $25,000 up to $200,000, okay, is basically the Economic Injury Development Disaster Loan, the EIDL, still called that. It's the third, in essence, tier, but that amount up to $200,000 doesn't require personal guarantee, which just means that the business is signing on it. It doesn't require, you may have to, but it doesn't require the personal guarantee. Have to might be that the bank wants you to personally guarantee it. Maybe there's a credit score issue, so it's possible that you have to personally guarantee it. But in general, it would not be required. And so up to the $200,000, in essence, what's the big difference? Well, you don't have any collateral assigned. If it's above the $200,000 and it's up to $2 million, they are going to take collateral assignment just like they did if it was below $200,000, but you will need to personally guarantee anything above $200,000, which just means that your business is guaranteeing it and you are personally guaranteed it. In fact, any owners that are 20% or more in that ownership will have to guarantee it. So just as a quick recap, it's all Economic Injury Disaster Loan, the EIDL. You've got the Advance, which is up to $10,000, okay? Then you have the Express, which is in addition to the $10,000. You have the Express amount, then above the Express amount up to the $200,000, and then you have over $200,000 up to $2 million. So the first one, which would be the Advance, okay, up to 10 grand, you don't have to pay it back. So there's no guarantee, there's no forgiveness, there's no concerns related to that as it relates directly to the EIDL. The one thing to note with that is that if you also got money from the Paycheck Protection Program, PPP, the PPP, okay, the amount that you got on this advance of the EIDL will be subtracted from the forgiveness amount of your PPP. This right here, you don't pay back. It's just completely, for lack of a better word, forgivable, okay? But it does have an effect on the PPP by reducing down the forgiveness amount of your PPP. The second is the $25,000, still EIDL. And on that $25,000, no personal guarantee and no assets are going to be assigned as collateral. Then you have above the $25,000 up to $200,000 will get assets assigned as collateral, but no personal guarantee. But then above the $200,000 up to $2 million, there's going to be a personal guarantee, and they're going to take assignment in your assets as collateral. A couple of things to note is that the rate is 3.75%. That has nothing to do with the EIDL Advance. So for the Express loan and above, so anything above the advance amount, okay, It's going to be a 3.75%. If it's a nonprofit, it's 2.75%. Check it out. You get to pay it back over 30 years. That's unheard of. You don't have to make payments for 12 months, which is phenomenal. And then there's no prepayment penalty, so you can pay this off at any time. Now let's talk about the uses. And the uses is the same for EIDL. Doesn't matter if it's an advance, doesn't matter if it's the express, doesn't matter if it's up to the 200,000, doesn't matter if it's above 200,000 up to 2 million. The uses and the are the same, and then what you can't use it for is the same. So this applies to anything EIDL. So it can pay your fixed expenses, so rent, utilities, overhead. Okay, it can pay your payables. It doesn't have to be something that was incurred after you got the EIDL. It can pay for anything that you owe on the business, okay, including the interest. Now, it's not going to include, though, dividends and bonuses. Does not include bonuses. And I'm going to read directly from the list. It doesn't include disbursements to owners unless for performance of services. So that would be wages or distributions, whatever you've normally been doing. Repayment of stockholder or principal loans, couple of exceptions to that. So if you loan money to your business, most of the time that money cannot be used to pay you back. Cannot be used for the expansion of facilities or acquisition of fixed debts. So can't buy a car, can't buy new machinery. You cannot refinance long-term debt. So if you have other debt, you can't borrow from this and then pay off other long-term debt. You can use it to pay off your credit card. That only includes the business expenses. So be clear on that. If you have personal expenses on your credit card, it cannot go towards that. It can only go towards your business expenses that would be on there. Does not count for, because this is economic injury disaster loan, for any repair or replacement of physical damages, because this disaster of COVID did not create physical damages. And it cannot pay down regular installment payments on your, let's say, line of credit, your business line of credit, or paying off loans provided, or paying off anything else that was a loan from another federal agency, including the SBA. Okay, so what is the EIDL really for? It's for your overhead, okay? Can't pay for relocation. It's for ongoing business activities, okay? But the thing to note here is that if you have this money coming in and it's paying your ongoing expenses, your overhead, you can still have business going on. You can still be making money and still getting out there. And so in essence, you have these expenses here, okay, that are getting covered. So when money comes in, there's less of it to have to go to your expenses, which means that there's going to be more available to you to do some of these other things. So how would you ensure that you're showing separation of that? What I recommend is that the money that comes in on an EIDL, most likely, put it into a separate account, and then out of that account, pay the expenses that are related to your ongoing business activities. Or if you're a business that you don't have that long-term debt, you're not paying off any credit cards, you're not pulling money out for yourself, and you are not trying to refinance a debt, and you're not buying fixed assets, you're not repairing things, meaning you just don't have those circumstances, then I would think it's fine to put it in your operating account. Now, I just said you're not paying off credit cards, so let me just be clear on that, because it seems like there's a lot of confusion. You have to make sure that it's not so much that you're paying off a credit card, you'd be paying off business expenses that are on a credit card, but you can't pay off a line of credit, okay? What's a line of credit? The bank gives you $5,000 when you need it. That's very different than a credit card. But the key here is, if you're noticing the theme, it can only be used for things for the business ongoing expenses, which as an owner, if you're involved in the business and you've been paying yourself, or you're taking out distributions for services or guaranteed payments, then yes, you can still continue to do that, in essence, at the prior amount. Now, You're supposed to keep any and all records related to this for 6 years. However, if it's a 30-year loan, I would keep any records related to this until the loan is paid off plus 6 years, in my opinion. So if there's ever a question later on the use of the funds. So really, if it's an expense you're only going to have every once in a while, right, that's not ongoing, okay, then it's not going to be covered by the EIDL. And I don't just mean like, well, I have a quarterly fee here for my IT person. I'm not talking about that. It's just if it's like, well, I'm only buying this because it's a repair. I'm only buying this and it's probably the only time I'm ever going to buy this, then it's most likely not going to count for the EIDL. And I know that you can make arguments like, well, but I got to have a computer to be able to do my business. Okay, surely you have some other money. You can either use it from other profits, but surely you have some other money to buy a computer. Well, I need to buy a car because I need a car to be able to conduct my business. Can't use EIDL money, period. Now, you might have other profits that you can use to buy a car. You can go out and buy a car and get a loan for it, and then the interest that's due on it, the EIDL can pay the interest portion of it. So I don't think you have to get too worried in my opinion. It's just if you're using it for ongoing expenses, which includes your PPP, then at the end of the day, you really shouldn't have any concerns here because you should have other money coming in. And if you don't have other money coming in, then you need to borrow it somewhere else or put money in yourself or somehow figure out other means to buy a car or a computer, because at the end of the day, the EIDL is for ongoing expenses. All right, hey, hopefully that helps. The EIDL has no effect on the PPP above the advance, okay? Now, if you're concerned about it, because there's nothing really on point here, but I would not use the EIDL for payroll if you got PPP, okay, during the PPP period, okay? So you can get an EIDL. There's no reason there's a hole that has to burn in your pocket on an EIDL. There's no timeline. You don't have to use it up with any certain period of time, okay? So what I'm saying is if you have an EIDL, don't be using it for payroll until you've used up your PPP funds, or if you're not using up your PP funds for payroll, okay, then wait your 8 weeks just to be sure. Point is you do need to use it for different expenses from the PPP. How would you show that? Having this money in a separate account from the PPP. So if you got PPP, here's all you need to know. Use your EIDL for expenses you're not using the PPP money for, and therefore it won't have an effect on the PPP except on the advance. The advance, it will reduce down your PPP loan forgiveness, period. So nonetheless, even though it reduces down your loan forgiveness, the EIDL needs to be used for other expenses than what the PPP is covering if you got PPP. Sorry to keep saying that triple P over and over. Here's what your takeaway is. If you're like, wow, that seemed like a lot. Here's the takeaway. You ready? If you got EIDL and you got PPP, do not use EIDL for what you're paying for with PPP money. Follow? Got to just pick, right? I mean, you're not going to pay a utility twice. So if you have utilities and you got to pay your IT guy, you're paying utilities with PPP, you're paying your IT guy with the EIDL. You're paying rent with PPP, you're paying the dues, the interest on something that's not covered here. Follow? So if you're getting confused, then just step back, draw a column and go PPP, what's it cover, right? Payroll, rent, utilities, the interest on business debt, health insurance, and the retirement match. Okay, so write that down. And then to me, it's got to be simple. Like it just can't be confusing to then go, okay, so of my EIDL until my 8 weeks is up, until I've used up my PPP money, I just don't pay for those things with EIDL. The other reason I don't know how it would be confusing is if the only expenses you would have as an example is rent and utilities, I don't know how it's confusing to go, well, do I use EIDL or do I use PPP? Well, if that's literally the only expenses that you have and you have PPP money, it seems obvious that you would use PPP money until that's exhausted on those expenses, and then you'd use EIDL if the only expenses you had was rent and utilities. So if you're like most businesses, you have rent, you have utilities, you have an IT expense, you have some kind of dues. Seriously, you just think about all the other expenses that you have running your business that's not rent, that's not utilities, that's not payroll or health insurance or retirement match. And during the PPP period, 8 weeks, and while you're using PPP funds, okay, if you exhaust the PPP funds somehow within 5 weeks, then you can start using EIDL. So I know there's lots of questions that come out. It's like, well, can I use it for this? Can I use it for this? Can I use it for this? Bottom line is you're not using it for the same things as PPP during PPP era or money being spent. And then you're not improving, you're not moving, you're not buying assets, you're not doing repairs. And if it's an ongoing expense, a regular expense, it should count if it's something that your business normally pays for. All right, hey, I know that there's a lot of overlap there, but the thing to note is that the EIDL was around before PPP. Okay, so that's why it's like, oh, we got some overlap here. Okay, you can get both. You can get EIDL and you can get PPP in the environment that we're in. All right, hey, if you made it to here, I appreciate it. And I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.